Good. How are you?
I'm good. Hey, everyone. This is Laurie Reed from Guaranteed Rate. She is joining us today on this very special Heim Time edition because not only do we have a special guest with us, it is also Valentine's Day, hence the pink and red and happy flowers that are here. Not going to air, of course, on Valentine's Day. But February is just a month to be, think about love and friendship and all of that. So hence the decorations. Laurie Reed is a local lender here in Clarksville with Guaranteed Rate, and she has also been a realtor, which makes her a wonderful resource, and she's a huge help to our team and to clients. Yeah. So we are going to pick her brain. I have not warned her about anything that we're going to talk about, so it's all a surprise. And do you like surprises?
No. Normally, yes, but not this kind. Not this kind of surprise.
Not a fan of surprises, so she's going to kill me later, but it's going to be just fine. Okay, so we're going to make this as easy as possible, I promise. Oh, and also the teacher in me came out in preparing this, so I'm sorry. And also it should be fun.
It's always scary when you say I'm sorry up front.
It's good. Okay. All right. So tell us, Laurie, how long have you been a lender?
I have been a lender now. I've been a licensed loan originator for going on 5 years. Okay. I've been in the lending industry for almost 8, and I was a realtor for 13 prior to that.
Oh my goodness. Yeah. So lots of experience in this real estate land, which is why you're so good when I call you and ask you all the questions.
Thanks.
I appreciate that. It is Valentine's Day, so do you have special plans?
None. Go home, eat supper, and go to bed. That's like it. I might actually go home early today. That's my big
There you go. I think there's nothing wrong with that.
Yeah.
I am looking forward also to doing a similar thing.
Nothing.
Yes, doing nothing. So that is all good. Okay, well, we are going to jump right into this. And once again, everyone, I did not give her anything at all as like a warning. So we'll just see how this goes. Okay, so Laurie is here with us, and typically when we have a lender come on to our program, or other programs have lenders, they kind of just talk about what rates look like and what it looks like in lending right now and the different products that are offered.
Right.
And so although there's a lot of value, and we're going to touch on those things, I wanted to shake it up a little bit because that's the teacher in me. And poor Laurie does not have any idea what I'm about to throw at her, but I promise it's going to be fine and hopefully fun because we want people to get the knowledge and stick around and learn what we're talking about so that they can reach out and, if they want to buy a home, then we can help them. That said, all right, Valentine's Day. What's more Valentine's Day related than conversation hearts? Like be mine, you're cute, love, all those fun things. So we're going to have lender related, real estate related conversation hearts that you have never seen before. And we're going to chat about them because I think lots of people maybe have heard terms. They know about some of these things. They have concerns. They're misinformed, which is probably a big piece. And so we want to just kind of simplify things as best as we can and explain, and then hopefully prompt someone to reach out and ask us questions because both of us are very approachable, real people, right?
Right.
I mean, anyone can call me and I'm going to talk them through, whatever their questions are. And I know you do the same thing, and we'll get to that a little bit more too, because I have something else yes. Anyway, once again, poor Laurie does not know what's happening today, but she's going to do great. All right. So our first conversation heart is too much debt, DTI. Now, DTI, for those of you, debt to income, and Laurie can chat more about that, but I don't think I can get a home loan. I have so much debt. Can you help me?
I can. It really depends on what is your debt? How much is your debt? A lot of times, people will call me and we'll talk about debt to income ratios, and they're like, "Well, I have, this $800 a month car payment, or not even the car payment. I'm sorry. They'll have a
Although that's an accurate car payment.
in today's world. Yes,
Yeah.
it is.
Yeah.
But they mostly what I get is borrowers tend to talk about their total debt in the meaning of, I have a $5,000 loan, I have a $13,000 car,
Right.
note,
$30,000 student loan.
right, all this stuff. But debt to income is not based on that total amount.
Mhm.
It's what that monthly payment is.
Gotcha.
So different loan programs allow different debt to income ratios. So you
Mhm.
might have too much for one, but you might fit into another.
Right.
So it really all depends. And then after that, it could be something as simple as eliminating some of your debt.
Right.
Especially like now. I mean, I know it's the month of love, but it's also tax season.
There you go. Yeah.
So a lot of people are getting their tax returns.
Mhm.
If you're looking to buy a house, talk to a lender, see what that debt income ratio is.
Yes.
And you get that tax return, pay off some of those debts, and then
Mhm.
have that down payment ready. So there's a lot that goes into debt to income. It's a big portion
Sure.
of the lending process,
Mhm.
but it may not be as bad as you think it is.
Yeah. And you touched on something I think that's important, and I've heard you say before. When you do get a potential large sum of cash, right? Your tax return is coming in. I would say, and you kind of mentioned this, to reach out to you if your goal is home ownership, right? Reach out before they choose to do
Right.
chunk down something, because you guys can strategize about, hey, if we do this, then it bumps you up and then you're able to be considered for this loan type. If we do this, etc.
Yeah, and that's a big thing. It's very important, I think, to talk to the lender first, because if you're wanting to pay off, maybe there's a collection on your credit report, but it's 6 years old.
Right.
Paying that off may not help you,
Sure.
or it could hurt you. So it's definitely important to talk to somebody first to find out what you need to pay off before you just willy-nilly go,
Yeah.
I gotta pay it all off. No, you may not necessarily have to pay it all off.
Right. And I think a lot of buyers feel like they need to
Mhm.
clear it all. There's just no way, because I have too much. Like you said, I owe $20,000 or whatever it is. And then also there are some ways, creatively, right, that possibly sellers could pay off some of that. So there's lots
Like a
of
VA loan.
Okay.
Can that happen?
Mhm.
So when a seller is paying concessions on a VA loan, if there is debt that the buyer has that they need to have paid to qualify for that loan,
Mhm.
if there's enough left over in the seller concessions,
Mhm.
then it can apply towards the VA borrower's debt.
Perfect. So yes, those of you who are eligible to use your VA loan, which Laurie has all the knowledge regarding the different loan types, that is an option for you and something to also discuss.
Mhm.
Concessions are money that sellers are willing to give. We're seeing it with not only builders but also existing home sellers, especially right now when things are a little bit slower. We're seeing them offer quite a bit,
Yeah.
typically,
Yes.
towards concessions to help with not only closing costs, buying your interest rate down, or even like if there's money left over,
Mhm.
helping with some debt. So,
Yep.
Perfect. Okay. Next conversation, Hearts. I just heard this one the other day, actually. I was doing an open house, and it was someone who owned a home already. Super, super sweet lady, thinking about like her mom's moving here potentially and just needing more space. And she's like, okay, so if I like this house, I need to have 20% down, right? And I was like, well, no, possibly, maybe if you need that to be able to qualify for the loan type, but there are certainly loans out there
Yes.
that do not require you to do 20% down. So do you get that a lot as well?
We do. And that is probably one of the biggest myths
Mhm.
about home buying, is having to have 20% down.
Yep.
20% down eliminates having to have private mortgage insurance
Sure.
on that conventional loan.
Mhm.
FHA, the minimum down payment is 3.5%.
Right.
The minimum for conventional loans is actually only 5%.
Right.
So you don't have to have 20%. It's just a matter of that mortgage insurance. How much are you wanting to pay? The thing right now is the payment.
Mhm.
Stick in a budget. And so as a loan officer, that's one of my jobs, is what's the best program for you
Right.
that's financially going to benefit you.
Mhm.
I mean, we don't want you to put your whole life savings into a conventional loan if
Absolutely.
you don't have to.
Right. Yes. So definitely don't stay just waiting, thinking, oh, I'm not there yet. I need
Right.
to have 20% down. You may already be there.
Yep.
Or you may need to do certain things, but it's worth reaching out and starting
Always
the
have
conversation.
the conversation.
Yes.
Always.
Which is why we're doing conversation.
What's always say? What's my
favorite?
favorite saying? Oh, she said, do I know that?
Do I know what you always say?
What is my favorite saying?
Call me?
No. The answer is always no unless you ask.
Oh, there you go. Okay.
How do you not remember that?
I don't know. I hear a lot of things. Sorry. Okay. The answer is always no unless you ask.
Right.
So there you go.
You should always have that conversation.
Absolutely.
You know.
And that's, again, why we do these things, so that people can learn. And then also you just know that we're friendly and we want to help. All right. Next conversation, Heart. I should totally just shop for a house first. I might not even like any houses around here. I'm pretty sure I can probably afford 400,000. So I'm going to go to some open houses and just look at them before I even really look at my finances. Thoughts?
So years ago when I was a realtor, this is exactly what we did. Somebody would come in. Many times I'd just get phone calls, say, hey, I want to look at this house, or hey, I want to look at a house like this, blah, 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 whatever. And I would meet with them. We would look at some houses, and then we would refer them to a lender and get them pre-qualified. Now that I am on the flip side of that, and I am on the lender side of that, and speaking with more realtors and the way that things have changed over the years, I'm like, no, don't ever do that.
Yeah.
Because what happens and I never thought about this as a realtor.
Right.
Yeah, I never thought about, well, what if I'm taking them out and showing them this house and they love it, but they can't afford it?
Yes.
Or, whichever the case may be, whether it's debt to income ratios, or they don't have the money for the down payments, or whatnot. And what if they just absolutely love it? Heart set on it, and now it's a no.
Yeah.
I mean, that makes them mad at me. It makes them mad at you and everybody else in between. So, no, we don't want to do that.
You're starting off your home search in a negative way because you've got your heart set. You're picturing where your couch and the Christmas tree are going to go. You've started planning, and then we deliver the news that that's not quite going to work for your budget or whatever. Certainly, we meet lots of people at open houses. I know you are a great one to go and hang out with us at open houses often. And we want you to still come. So please don't be discouraged about it.
Right.
It's just a really great idea if you are, considering a home purchase, even if you think, oh, not till next year, 6 months from now, whatever that looks like, still just kind of reach out and get an idea so that you're not heartbroken when you fall.
You need to know what your buying power is.
Yes.
Of course, you can go to any open house and dream and look and all that, and that's great. And if you fall in love with it, I mean, all you got to do is reach out and get you pre-approved then, and see if it fits in your budget.
And also, we're in a different market than we were a couple of years ago, meaning a house would hit the market and we usually didn't even have time to do an open house because it would be gone within a day. So then that can be very challenging, because then I always feel like you're dog paddling to try to catch back up to being eligible for the house that you fell in love with. Right. And so that's also, even then you may find out that you truly were able to qualify for it, but it's already gone. Yeah. And then that doesn't feel good either. So
it's good to have not just a pre-qualification, because a pre-qualification is different than a pre-approval.
We're going to talk about that.
Oh, then let me just stop right there.
She's already understanding my brain, which is hard to do.
I'll stop there.
Yeah, we're going to touch on that in just, actually the next conversation.
It is.
Oh, that's just so amazing. We are so in sync. That's great. Yeah. So pre-qualification versus a pre-approval. Yep. I actually learned some things I learn new things every day, as I'm sure you do too. But pre-qualifications, that's typically, sometimes we get clients coming to us that are already pre-approved, right? They've already chatted with you, or they've chatted with another lender, whatever. And we get that pre-approval. Most of the time, we get the I'm pre-qualified. So can you kind of fill in the blanks on what those mean?
Difference between the pre-qualification and the pre-approval is a pre-qualification is just me going by the information you've given to me on our phone call.
Okay.
You can call me and you can say, I make $25 an hour and I have no debt and I have no student loans and I'm not married and I don't have any kids. I don't pay child support. Great.
Cool.
You are pre-qualified based on that information.
Now, okay, so do you pull credit for that or no?
We will. We will
Okay,
do a soft pull. We will always do a soft pull on the credit report. So we look at the credit. We look at what they, and we base it, it's simple data entry based on the information that they've given us. You know, you pull a credit report, you put this in, what you put in, and then it spits out yep or no. Okay. Pre-approval, you have sent me your pay stubs. You've sent me your W-2s. I've got a verification of employment. I've seen your bank accounts.
Right.
That is a pre-approval. And the difference, the biggest difference between those two are it is much less likely to fall out at underwriting with a full pre-approval versus a pre-qualification. Because I can pre-qualify you. You can go look at a house, love it, make an offer, and then all of a sudden I get your pay stubs and
it doesn't
work 40 hours a week, or, you know, you're not making 25 consistently, whatever the case may be.
Right.
So you definitely want to have that pre-approval. We actually do a step further.
Okay.
If we need to, if there's ever a time that I feel like it's a little bit maybe questionable, maybe I'm questioning myself, then we can send it in for a pre-underwrite where the underwriter actually looks at it before you
reviews
go look at houses. Yeah.
So I'm glad you said underwriter, because in my mind, this is what I think an underwriter is. You know the scene in The Wizard of Oz where the wizard's behind the curtain?
Yes.
I feel like that is the underwriter. Every
do
time
too.
when you tell me or another lender tells me, oh, it's in underwriting, I think it's the man or woman behind the curtain who no one truly knows, which I know you actually know.
Booming voice. Right.
This is not going to work. I know you know them and you talk to them.
Yeah.
But obviously they're real people. They're not like bots or something, but underwriting is a part of the whole process. So so for a pre-qualification, it doesn't necessarily go to underwriting.
And a pre-approval, it may not necessarily go to underwriting.
Okay.
Yeah. They're totally separate. I'm sorry. Totally separate.
Yeah. Good.
So a pre-qualification and a pre-approval really are just coming from me.
Okay.
So we actually do where you have like a level 1 approval, level 2. I think you've probably seen some of those. Level 3 is when it's already been sent to the underwriter.
Okay.
And the underwriter has reviewed everything. If I could send every file that way, I would, but it's not always necessary.
Right.
You know, back a few years ago, that was a key thing to do. Send everyone every client you get, send it on into underwriting, let them review everything. Because you're in a position now where you're making multiple offers and all this other stuff. You want to know that
you want to be strong.
Underwriter's eyes have already been on it. So that's good.
Yeah. So there's not any, hopefully any hidden things that are going to pop up. It's already been looked at by the man behind the curtain.
Yep.
And you have the 2 thumbs up and you're ready to go. And it is important to note, certainly there are people who come to open houses. They've not even started the process. We touched on that before. They don't know what a pre-qualification, pre-approval, it might be their first house. Totally fine. Still come and we will get you headed in the right direction. Sellers though, and also with builders, right? So going to a new build, construction site, all of that, we can show you that house. No one lives there. If you don't have the pre-qualification, not the huge or pre-approval, not the biggest deal in the world. We can let you see like a new house and fill the space out and all those pieces. But as an agent, showing a client a house that, people currently live in, and now they've had to leave in order for us to go and see it is not something I want to do. It's not something that I do. I don't show homes very often to those that haven't gotten the thumbs up from a lender. But, sometimes we do make that connection and then they're in the process or, whatever. I've got a pretty good idea, but I absolutely won't. And you shouldn't have a seller leave, pack up their babies and their dogs and, make their house
on a hope and a prayer.
Right. Because when a seller has a showing that's requested of their home, they are thinking and believe that a client's coming, a buyer's coming that is actually able to purchase the house. So just something to keep in mind. Realtors are not showing you for because we just don't want to go and do it. It's just not something that's a good idea on any house, really, but certainly if it's an existing home. So awesome. Okay, this is a fun one. So not all loan officers, mortgage lenders. I actually don't even know the difference between those terms, if I'm just honest. I was thinking about this last night as I was preparing. Loan originator, loan officer, mortgage lender. Are they like...
So no, the lender is guaranteed rate.
Oh, okay.
Because the lender is lending you the money.
Gotcha.
We, loan originator, loan officer, mortgage loan originator, mortgage loan officer, all of those are synonymous. We work for the lender.
Gotcha. Okay. So see, you just like helped me understand something. All right. So not all lenders are created equal. Not all loan officers are created equal. I run into this many times. Clients come from all over the place, right? They're referred, they're moving here. They've purchased a home before, they haven't, their parents have, all of the things. They think, which is totally fine, they should talk to their bank, or they should talk to, oftentimes we get, just USAA or a Navy Fed, which is totally fine. Absolutely. Reach out to any lenders that you would like. And I think it's a good idea.
Yeah.
As the agent who is here trying to, get someone into a home, especially when things are crazy and homes are moving quickly. It is very challenging when you are pre-qualified, pre-approved through someone who believes that their job is a Monday through Friday, 8 to 5 kind of thing. Now, I'm all for the work-life balance, absolutely. And I don't want to bother the lenders that I work with most often all the time. I want to be respectful. However, there are instances where things are moving so fast and someone has fallen in love with the home and they already have an offer, but they need ours by 10 o'clock or we don't even have a chance.
Yeah.
And I need to be able to reach someone. And so it's challenging. I tell, clients when I connect with them, right, that here are some lenders that we've had clients use in the past that are wonderful with communication and incredible customer service, are going to work hard for your business. And then I say, these are the ones that I can call on Christmas or Easter and they will answer the phone. And then I, of course, say, I won't do that. However, I could. And they would answer.
I think we had that conversation.
Yes. And I say that often because even though things are moving slow right now, and certainly there are many, many things that can wait till the next day or to banker's hours. But there are oftentimes things that I just need to know because it's so important to me to be able to tell buyers, this is what you're looking at payment wise. This is what you're looking at for total closing expenses, and have not down to the penny, but pretty close.
Yeah. Before
we sign on the dotted line to purchase this house. And then we find out on Monday, that's not going to work. And then, everyone is bummed out and we've done a lot of work. So all lenders are not the same as what this conversation it's actually a twofer because it says lenders work Monday through Friday, 8 to 5.
No.
So I already know that is not true for you.
No.
If you want to elaborate at all on that, you can, although I think I've done a good job.
You've done a very good job. No, lenders do not work Monday through Friday, 8 to 5.
Most lenders. Some lenders.
Most lenders do not work Monday through Friday, 8 to 5.
Right?
I do.
Yeah.
It's just because that's what I have to do. Right. When I in my whole thought process is, this isn't just a name on a piece of paper.
Yep.
This is a family. This is a life that is being affected. And so I have to do what I have to do. Last night, I didn't even leave the office until 7 o'clock, to go home. And most nights I don't leave the office till 7, 8 o'clock. And I may not get to the office until 10 in the morning.
Sure.
But I'm already up and working starting at 7. So that's what, you don't see because I'm not there. But no, we are not all created equal at all.
No.
And some of us will work ourselves to death.
Yes, and there should be a balance, and and you should work
It's
on that.
hard.
I should work on that as well. It
Yes.
is very challenging. I am the same as you in the regard of it is a family. It's a person on the other side of this. It's someone who, they're retiring, someone who's relocating here, someone who's in the military who's PCSing. It's all of those pieces, and those are people that need us. And again, there are things that can wait until the next day, but it's important to me, and I know you share the same sentiment, to get the answers and to be available. And so that's a huge piece. I think finding a lender is something that you need to feel comfortable with. And I tell that to clients as well. Talk with them, ask them the questions, because if you don't know, you won't know the answer if you don't ask, right? Ask them the questions, even if you think they're dumb questions, or even if you think you're supposed to already know those questions.
Right.
Ask the questions and connect with a lender that is going to get back to you pretty quickly and help you understand.
Right. And I think that's the biggest thing. So years ago, when I was in real estate, one of my brokers had said to me, Laurie, bad news does not get better with time.
Oh, there you go. That's actually.
And that has stuck with me for years.
Just pull the Band-Aid off.
Yeah. So, that's my thing. Even if I get an email at 7:00, 8:00 at night, and it's bad news, could I have sat on it till the next day? Probably. But maybe it's not a good idea. I don't know.
Don't tell me at 8:00 at night. I'm just kidding.
I'm going to tell you at 8:00 at night.
She has.
I have. Yeah.
It's fine.
You have to be able to answer the phone. You have to be accessible, because that's the thing. If somebody is taking the time out to call you, you have to be available to them. There's a reason why they're calling you. Whatever it is, whether it's, hey, what's the next step? Hey, has my appraisal been ordered?
Right.
Hey, what do I do now? Ease of mind by you answering the phone and talking to them will soothe everybody.
And it goes such a long way. And I am not trying to insult anyone who tries to keep to banker's hours by any means.
No.
And most of those will have a cell phone, available. But it's very valuable and important to answer the phone and be available. It goes a long way. So, okay. Next, down payment includes the closing costs.
No.
This is a big one. So down payments for some loan types, and you can correct me if I say this wrong, but there is a down payment that's required for some loan types. The only one, and I know there are little special cases, but VA borrowers are not required to have a down payment. However, and we certainly have lots of military buyers here because of our close proximity to Fort Campbell. Most buyers, I think, believe that they shouldn't have to pay anything.
Right.
And so closing costs, closing expenses are very different than a down payment. So,
So a down payment, you are right. VA is what we call 100% financing. So they do not need a down payment.
right.
USDA is also 100% financing.
Yes.
Does not require a down payment. Stipulations to that, obviously, there's income limits and you have to be in the county. Can't be in the city, but we're not talking about that.
But you can, and that's just another important point. She knows all of the different options and opportunities for lending. Also, first-time homebuyer programs, PHDA, there's many things creatively
What was the question
that
again?
can happen. It's about closing costs.
I feel like I got off on a tangent. And I was like,
oh, I helped you. But yeah, she knows the answers. So you need to reach out to her. Anyway, you were saying.
Yes. So those are the only two types of 100% financing. So the other loans are going to require a down payment. The down payment is your minimum required investment. You have to invest into your loan. Closing costs are the fees associated with getting the loan.
Right.
So it'll be appraisal fees. It'll be credit report fees, title costs, prepaids, insurance. All those things are your closing costs. And they are separate because they are, again, the fees associated with getting the loan.
Right.
The down payment is what you have to have also to get the loan.
Yes.
But it is your minimum required investment where you have to make that payment. It could be a second mortgage through, like
Sure.
you talked about, one of the first time home buyer programs. It can be a gift from family members and friends. It cannot come from the seller.
Right.
So that's why it is your minimum required investment.
Yep. So yeah, they are separate, and even that is a confusing thing.
It is.
To a lot of people. So yes, reach out to either one of us and we can chat about that. But certainly, Laurie can chat with you about the different options. And like you touched on earlier, so conventional loans, you can possibly do it for 5%. FHA loans, 3.5%. That's the amount that we're talking about for the down payment. Closing costs are additional. They are separate.
Yes.
We are in this wonderful market right now where sellers are contributing in most cases to knock out the closing costs, or a good amount of them often. So then it leaves you just worrying about the down payment piece. And there's options for that too. Gift, like you mentioned, HDA, et cetera. So that is a good point in our conversation. I think we're nearing the end.
Oh,
Okay. This one we kind of already talked about, but don't talk to a lender until you're ready.
why?
I think that, and honestly, we run into this as agents as well. I don't want to bother them until I'm like really ready to purchase a house. And Shannon and I always talk about that, because it doesn't matter to us if you are 6 months out, if you're a year out, if you're thinking about maybe getting an investment property in 18 months. Start the conversation. Like, let us know, let us chat with you about that. And the same goes for you. I don't think there's anyone that you would not chat with because they tell you, we're probably going to buy next year.
Yeah.
You're still going to have a conversation.
I'm still going to have a conversation. And because my conversation is going to be, let's take a look at where you are now, because what if you don't qualify right now?
Right.
We need to know what steps you need to take to be able to qualify a year from now. You know, there's so many different rules and guidelines for every different loan program that you may think you're ready. Maybe you're not.
Right.
So whether it's you're ready now, or you're ready 6 months from now, or a year from now, maybe you're thinking a year from now because you don't think you qualify right now.
Right.
When in fact you might. So always have the conversation. If it's a thought that crosses your mind, hey, I want to buy a house. I want to start investing in myself instead of paying my landlord. Well, then have a conversation.
Yep. And that's what I tell people often, that you, lenders, can give you the steps to get you to where you're trying to go, and lay out kind of the plan and what will happen if you take care of this debt and then we'll repull credit or whatever that looks like. They have the tools to kind of guide you through that. And just start it, right? Get on the radar, even if you're a ways out.
You don't know. One of my favorite stories is I had a client last year that when she came to me, she was like, Laurie, we've been trying to buy a house for the last 5 years. And I've talked to several different lenders and they just keep telling me no, but they don't tell me why. And I'm like, okay, let's dive into this. Let's see, you know, what's the problem? Why can't you buy? And so we did. And it turned out her husband had made some not so wise decisions in the past. But we took care of it. I told her, I said, this is what you need to do. And at first, I mean, she was like, well, I don't want you. And I was like, look, I can't help you if you don't want to help yourself.
Sure.
That was where that went. And she's like, okay, I'll make the phone call. She did. Everything was done exactly the way I asked her to do it. And within 30 days, they were moving into their first home.
That's amazing.
And she was so excited because it turned out like the day before or 2 days before we closed, her husband actually came home from deployment. So he got to come home, help her pack, and move into their new house that he hadn't even seen yet.
Oh, gosh.
But yeah, and it's just one of my favorite stories because she took the time to have the conversation. And when I told her what I felt she needed to do, she did it. And it worked. So, and now they're homeless.
She had the knee-jerk reaction, though, of, oh,
she really did.
I don't want to do this. And what if you're not telling me?
It's not going to work.
Right. Just because she'd been let down so many times. So I love that story, especially on Valentine's Day. Thanks for sharing that. It is a heartwarming story. It is. So that's happy. Okay. Last conversation, Heart.
Okay.
Credit is the number one factor. So I know I probably opened a big can of worms here, but everyone's like, my credit score is terrible. My credit score is terrible. I don't even know exactly personally Yeah, I guess I kind of have an idea, but what a terrible credit score would be, maybe like 400s or something. Credit score being the number one thing.
Yeah. No.
Is that it? Okay, so this is a myth. All right.
It is another myth.
Okay.
So it is one of the factors.
Sure.
One of the factors. So we talked about DTI in the beginning.
Yes.
DTI is a factor. Credit is a factor.
Mm-hmm.
The loan value is a factor.
Okay.
Like, are you putting any money down? If so, how much?
Right.
Your credit history is a factor.
Mm-hmm.
So you can have a good score.
Mm-hmm.
Let's say you've got when I say good score, let's say you have a 656 credit score,
Okay.
which is fine. It's going to be great. But you've had 2 late car payments in the last 6 months.
Right.
And you've had a couple of late mortgage payments and all of your credit cards are, run up. Those are factors that play
Mm-hmm.
in this as well.
Mm-hmm.
So there was another thing I was going to say. Now I don't remember what it was.
No, but you're good. That all
Yeah.
makes sense. So it's not just, hey, I've got a 700 credit score. I can definitely purchase a house. There are other things that go into it.
There is. And so like for us, depending, again, you qualify for each different program based upon the credit score.
Okay.
But there are other things that go in line with that.
Mm-hmm.
So, some of our loans, you can go down to a 580 VA, you can go down to a 550.
Mm-hmm.
But what happens then is the lower the score, the higher the interest rate you're going to get.
Right.
So you really want to do what you can to try to improve your score. If you're in a situation where you have to buy a house now
Mm-hmm.
and your credit score is only a 580, well, if you have to buy a house at a 580 credit score, then buy the house.
Right.
You may have a little bit of a higher interest rate for the first year, and then you refinance later, but do it now and work on your credit within that next year.
Right.
So that when you do refinance, then you do have a better rate.
Yep. And again, to wrap up the conversation heart segment here, it's a conversation. So, and also I'll end with this, checking our credit on those Credit Wise or Credit Karma.
Yeah, I don't do that.
Don't do it. Okay. Don't do it.
that.
Those are not.
They are accurate. That is
Okay.
a misnomer that a lot of people say. They will say it's not an accurate score. It is an accurate score. There's probably 70 different credit scoring models.
Okay.
Half of them I've never even heard of. But Credit Karma is one that we hear the most often when we have the conversation with a borrower and you say, well, have you had your credit pulled recently? What do you think your score is? Well, Credit Karma told me that I got a 628.
Right.
Great. My conversation then becomes, Credit Karma is an accurate score, but it is not the score that I use.
Okay.
I use a FICO score. So whatever's on Credit Karma could be higher or lower than what I'm actually going to see.
Gotcha.
So those types of things are great for monitoring your credit. What's being added on there? What's being put on there? Watching your balance versus your limits, things like that. But as far as the score, it's not what we're going to see.
Don't hang your hat on them.
Right.
Okay. Gotcha. Okay. Well, thank you for having this conversation with me.
One.
We just had about 20 of them. Okay. Well, thank you. A gigantic thank you because you played along with my brain and my creativity. So I appreciate that. Hopefully you didn't feel too put on the spot.
No, it was fun.
Good. She says that like really quietly.
It was fun.
It was fun. And she's still smiling. Well, we appreciate you. We will absolutely have you back again if you're willing to come.
Of course.
And I won't put, I actually am not even going to say that because I know,
Because you might not.
I know who I am. I know my personality. I can't change it. So I will still do
Surprise
something.
you.
Yes. But wasn't it more fun than just be
It
like,
was.
can you please tell us,
Yeah.
tell us,
Your DTI must be 45 or below.
please say many numbers right at this time. So, and then people will be asleep. So at least we've kind of kept, hopefully, everyone on their toes, including you.
Awake. We kept them awake.
Yes. Anyway, thank you so much for joining us.
Thank you for having me.
Yes. And thanks to all who are listening, watching, Heim Time. Till next time.
Bye.
Bye.